Hi, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. Today we're going to go through, now that we've had the OPEC Plus meeting that just ended, we're going to really look at what's happening with production, what's happening with floating storage, and then where do they sit on a geopolitical level, because there's some, different changes that are happening. Now, it's really just important to kind of to hone in and focus in on, okay, well, what do they actually say? So here, the OPEC production. So this slide, this chart really comes from their monthly release. And you can see that in June, they were about 22.3 million barrels a day. Now you're going to get in July, you're going to get a step up of about 1.2 million, which is just those additional cuts that Saudi Arabia increased. Those will start to come back. So we're going to see this closer to what we had in May. Obviously not exactly what we had in May, just a little bit closer. So closer to probably 23.5. And then August. So now what did they decide? So they decided in July that they're going to start that tapering that they were supposed to do in July, in this month, which was go from 9.6 million back to only a cut of 7.7. So that is still the case, but you still had countries that were cheating. Like we've talked about Nigeria and Iraq as being kind of the focal point. And so those countries are going to have to make up for what they cheated, which means that the cut, instead of it being 7.7, will actually be 8.1. And that kind of breaks down to about 842,000 barrels that are going to be compensated through August and September by Iraq, Nigeria, Kazakhstan, and then to a small percentage, Angola. So the bulk of the compensation, just rough numbers, because, these can change and we're going to start going through this a bit more and we'll have a report on it. But the compensation right now should be Iraq cutting by an additional 174,000 and Nigeria about 68,000. Now, this sounds like, oh, this is great. They're starting to cut. But when you look at West Africa, we have two key blends coming from Angola and the Congo that normally go into China that just are seeing their prices get negotiated down well below the premiums that are posted. And we're just not seeing the kind of demand that we have seen just because there's so much storage, crude sitting in storage within China, which is where these two blends typically end up. So that's why we're seeing a lot of these, push and pull. There's the positives where they are going to have a cut. They're going to continue to kind of manage this, but we are seeing Russia increasing 400,000 barrels in August, and we do have Saudi increasing to a small percentage. But we're going to go through some nuances within the Saudi component in a few minutes. So we really need to talk about Asia, because Asia is continuing to see these floating storage levels. They came down a little bit, but you're starting to see the pace of it coming down, really starting to level off. And that's really, China continues to take new deliveries of crude, which just means that it's going from considered oil in transit to oil in storage. And you're starting to see India kind of level off as you got the initial spike from some of these refiners coming back online. So you're starting to see this normal off. Again, this will continue to move lower. It'll just start to taper and the slope is going to change just because you're not seeing the same type of take up in China as they cut runs across not only the teapots, but also the state-owned facilities. And when we think about where Middle East floating storage, now typically we have that cloud, but it's important to kind of pull out and look at the 5-year numbers specifically. So you can see that the blue line at the very top is 2016. So that's kind of throwing off where their normal storage is. And right now, their current floating storage is right around average, which shouldn't really be surprising given how they have an adjustment happening right now, which is we're now in peak summer. So typically within the Middle East, just because there's so much oil, they use some of these additions that they normally have to power their air conditioning by just, the electrical side. So even though you're getting an increase in Saudi crude production, it doesn't mean it's going to hit the water. It's just going to be used to maintain and to increase electrical demand within the kingdom. So that's why, even though you could say, oh, well, it's a little bit bearish because they're going to increase, it's like, well, it's still going to be absorbed. So we're net, we're not going to see too much of an increase past July on new Saudi exports. And that's why we look at the seaborne clean products. So we're going to break it down to clean in terms of what's going on versus what's actually oil. So when we look at clean products, now Kepler put this together, and you can kind of see how we had a big spike in just where refined products were going. So you had their own COVID increase, their own COVID lockdowns, which limited local demand, which also set more for exports. But if you can't export oil, well, maybe we can export more product, and you can see how there was more product being exported. So the spikes remained relatively consistent with seasonal, previous seasonal highs. And we don't see that really changing. So even though you're going to get an increase in oil production, it's going to go directly into the electrical side. So we think that these clean product exports are going to remain relatively constant through the really, along seasonal averages. Nothing to really be, excited about. But when we look at the monthly oil exports, you're starting to see that that increase, which we talked about, that's happening through June and then again through July, because you do have more production, because they did do the additional 1.2 million barrels a day, which is going to come back. The other interesting thing which we have to look at is when you look at August. So typically in August, on a seasonal level, exports go down just because that's when they're consuming more locally. So it's important to consider, okay, well, they're going to increase their production. Right here, they're going to keep exports relatively flat, which, depending on how you view the storage market, which we're a little bit more bearish on storage, you're going to kind of see how this is going to keep a cap on really where oil prices can go as we can continue to work through and whittle through a significant amount of product that still remains not only onshore, but also offshore. Now that we've talked about Saudi Arabia and some of these other storage areas, we need to look at West Africa, because West Africa continues to obviously grow, or at least produce more than they were supposed to. And it's a lot of that's going into floating storage. So it's important to consider, when you're looking at OPEC, to also consider what West African floating storage looks like. And we've seen a continued rise over the last couple of weeks, and we still remain well over the seasonal average. And the reason why that's the case is because Nigerian crude is struggling to find a home, because Angola typically goes right into China, and we're starting to see that slow down. And Nigeria typically goes into North America as well as Europe, and you're just not seeing the same kind of pull through. So even though we're seeing these additional cuts where Nigeria has said, oh yeah, we'll meet our obligation. Well, it's like, well, you kind of have to at this point, just because where are you going to continue to put this oil? So this is something that we have to consider in terms of, are they working this through? Where is it sitting? Because even though they're cutting production, they can actually maintain exports, just because there's going to be so much that's sitting on the sidelines that can get pushed back into the market. And when we talk about China and we talk about movements, we have to consider where the independent refiner storage is. And you can see that we're at a seasonally adjusted all-time high in terms of what's sitting on the coast. And this is just in one specific location. If we look at the whole coast, you can see that we're at all-time highs in terms of what Chinese oil, or what oil is sitting off the coast of China. Now, you might say that, okay, well, imports were up, especially as they were in June. They had a record amount of imports, but we didn't see a record amount of refined product, or realistically refinery utilization rates, which means that some of this oil that was being pulled in was still going into onshore storage, whether it be their own strategic petroleum reserve or within the refiner. So we're still getting this kind of mixed message from China, but the data is starting to get a little bit better, specifically on the export side, as we did get an increase in total tonnage moving onshore and offshore. And the reason why we look at that is because, Chinese data is, you never really can trust it, but if you can count it, if you can see it coming off, it's something that is at least a certain amount. Instead of relying on customs data, I can actually see the boat. I can actually count what's on there. So you get a little bit of a normalization. We're starting to see a little bit more of these exports, but it's really not, it's not relating back to additional draws out of storage for refined products, which is going to be a hindrance as to how quickly can some of this oil come off the coast and go onshore, especially as we've seen refinery run rates, specifically in China, come down. The teapots or the independent refiners are targeting about 65%, and we should see about 5% come out of the SOEs, and they'll average about 70%. So some of these imports will slow down, specifically into the refiner. So you're going to see this bottleneck that's going to continue to remain, which will be an overhang within the overall market, which will be reflected in West African floating storage, Chinese floating storage, and this is a good way to kind of keep tabs on that. Another way to keep tabs on when we talk about, well, how do you know that there isn't this pull through? And is we're continuing to see sticky exports of refined products from China, and a lot of them are still showing up within Singapore. Now, Singapore had a big increase. Again, this is from last week, because this week, the data comes out on Thursday. We'll get an update. We'll see, okay, well, did it come down? When it does come down, it's not coming down to that level, and it's just, so we're still maintaining this all-time highs on a seasonally adjusted level, which is going to be problematic for pricing overall. And that's pricing across the refined products, which is why refiners, even if you do get a pickup in demand on the refined product side, there's really no reason or drive for refiners to aggressively chase, just because they're still struggling to make money, which is why we look at, gas oil futures, we look at different crack spreads, we look at these different metrics to really analyze, well, is the biggest buyer of oil in the world going to increase, which is just refiners? And the short answer is not yet. And here you can see gas oil futures, while the trend is obviously positive coming off of that insane low, it's still it's leveling off. Just like a lot of other things, as we come off the bottom, you're starting to see this level off, which is going to be a hindrance for, where does pricing really go? And when we take it a step further, when we look at just kind of that financial metric of the 3-2-1 crack, you can see we're still maintaining below the 5-year average and setting these new lows. And again, we've normalized, we've gone sideways, but we haven't really seen that increase. And the reason why we're not seeing that increase is because crude prices continue to move higher, and refiners buy crude to make product. And as those prices go up, and then the refined product prices don't really react, you kind of get this breakdown, which is why we're continuing to see a lot of these struggles, which is, I mean, these are just US metrics, but we can look at any metric, whether it be Singapore, Europe, India, the margins are still negative. And if they're not negative, they're just barely positive, which is going to keep kind of that hindrance of, well, where does this new oil that's sitting in floating storage really going to go? So you're seeing OPEC increase a little bit, but they're increasing to push it into storage or to use it themselves. So we're really not seeing a huge drawdown that we'd like to see at this time of year, because as we come into August and head into September, that's the key shoulder season where demand just falls off on there's no heating, there's less driving. So this is where, we want to see a more aggressive drawdown before we get to that time period. And now, this is a chart that we showed last week, but it's something worth really talking about in a little bit more depth, just because Iran continues to have a significant amount of crude sitting onshore and offshore, and there's a lot of different things that are happening there. And the problem is there continues to be, now I do a lot with geopolitics and I try to corroborate what's happening. So if you go just based on rumors, there's been about 18 explosions. Now I can confirm 11, and the 11th, the most recent one, is on the coast, where we've now had, I think they're up to 7 ships that have caught fire. And these are small little things that are happening, that, not to say that a regime change is going to happen immediately, but when you look at what's happening within Iran, they've lost the populace. About 85% of the populace is against the current regime. And it doesn't take much to get them to act on your behalf, whether that be the US, the West, the Israel, someone to try to shake things up and to really kind of break the current regime. And again, they're in an awakening period. When you think of the generational cycles, there's a chance that you can get change without significant violence. And that's something that we can all be hopeful for. But Again, who knows? So the thing that's happened so far, we had the centrifuge location blow up at the nuclear facility, and then smaller, low-level things in terms of disruptions. And they've tried to minimize the loss of life. It's more infrastructure disruptions. And these are little things that are starting to come out. And now you have Iran, the regime, talking about signing these new deals with China, which would bring in billions of dollars of investment, but require Chinese soldiers to be present. You have to buy Chinese goods. It's really along the Belt and Road Initiative kind of mantra that we've seen. And if you think about what the populace has been facing with these severe COVID cases, there's a lot of anger right now against China. So the regime's trying to push this, but again, you're just inciting and you're just helping solidify those people that no longer agree with you, or who says that they ever did, but really are starting to unite against and create a common front against the regime. So this is just something to watch, only because there's so much oil sitting behind sitting behind a wall, if you will. It's best way to put it. And even Libya is starting to see a little bit of a creep higher. Again, nothing crazy, but just because there's this back and forth, which we'll write about in length in our report coming out this week. But these are geopolitical things to consider, because there's a lot of oil that remains hindered. But if we do get some movements, there could be something that comes to light relatively quickly, because we would want to help these 85% of these people, give them capital, give them cash flow. And the best way to do that is to let them sell the oil that's sitting behind closed doors. Now, when we talk about the populace, there's a lot of things that can get them united. And we've seen that with the Ukrainian flight that was shot down, the different issues that continue to divide the country itself. But when do you get people to rise up? And it's really when you continue to impact their wallet. And that's why when we look at the Iranian currency, you can see the black market. You can see where people are feeling real pain. And this is because if you think about what the official exchange is, which is great, but where are people actually transacting, where they actually, where the rubber meets the road, how they're making money, how they're paying for things, where the inflation rates are. And the black market continues to show something very different from what the official numbers show. So not only are people struggling with illness, with a more aggressive regime in terms of ideology, but also on a monetary level. And there's a lot of ways that this could easily be, or at least relatively quickly be released, and that's getting that oil back to market. China's offering that, saying, look, we're going to buy your oil. It'll be at a 25% discount, but we'll buy it in exchange for some of these other benefits in terms of investment. But again, these are problems. Like India and Iran have a very healthy relationship. And India was told that they can no longer participate in the port that they were going to jointly create. And again, if you think about where the allegiances lie, it's more with India versus China. So this is another thing that's going to be an issue when we consider how does the populace feel and think about what's currently happening and how the trajectory of the country is going. So these are, again, regime change is hard. It's hard to, finger to the wind, but you're starting to see the pieces fall together and come, and the stars align, if you will. So again, these are things that we're going to keep looking at and keep focusing on, just because there's a lot of oil locked behind this wall. So again, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. Thanks again.